Having a chat with you. For the time being, let's turn our attention to the metal space. We have Aditya Welekar, the Senior Research Analyst at Axis Securities, who joins us on the show. Hi Aditya, good morning and thanks so much for joining in. Well, I want to talk about the top focus in the metal space. That's aluminium first up, and then we can discuss ferrous as well. You know, from the aluminium space, what is your pecking order right now? Nalco's numbers look superb, but valuation-wise, it doesn't have support. Hindalco, well, they seem to have made a bit of a disappointed the street with that upping the capex at Novelis, and Vedanta forever ignored, but suddenly it's come back on everyone's radar. Your pecking orders among these three names?
Yeah, good morning, Nigel. Yeah, so definitely aluminium numbers, we have seen that in the last, in the previous quarter, in this quarter, we have seen that the aluminium margins for all these companies have expanded. Upstream aluminium of Hindalco, they have reported EBITDA per ton of $880 per ton. Same for Nalco, margins expanded to 20%, and even Vedanta aluminium has done well. But at the same time, there are a host of other reasons, as you just described. So Nalco, the valuations are now quite stretched. Hindalco, we have an issue of Novelis capex, and Vedanta, there is a overhang of the debt restructuring at the parent. So the margin of safety at this point of valuation is not very attractive. So if you ask me for a pecking order, then maybe Hindalco first, then Vedanta, and then Nalco.
Got that. All right. So you're still going with Hindalco despite that capex disappointment, because maybe it's corrected 15%, so maybe bulk of the bad news in the price. What about the ferrous space? You know, what's your pick from there? Numbers looked okay for the past quarter. You know, JSW was better, Tata Steel was a little bit better, SAIL, you'll have to adjust those numbers, while JSPL as well was pretty okay. What's your view in terms of these, ferrous stocks? And what's top of the list for you? Because Tata Steel still has the Europe problems. You have JSPL, there's too much of rejig at the top out there. And SAIL is the PSU, it's got momentum, but does it have enough to take it higher?
Yeah, I think Nigel, the same issue here also. Even for steel stocks, the valuations have rallied quite a bit, and the margin of safety is once again not there. And at the same time, if you see the coking coal prices, they are still in the range of $310 to $320 per ton. Iron ore prices are still elevated, and steel prices are slightly subdued and under pressure. So from that perspective, spot spreads are under stress. And keeping that in view, the current level of stock prices not providing much comfort or upside from a valuation perspective. But yes, if we can look from a pecking order, then I think JSPL is slightly more structurally well positioned, because if we see Tata Steel has issues with their European UK operations, then SAIL has rallied quite a bit, and structurally it's a high fixed cost business. And then we have so each stock has a story to tell, but as I said, margin of safety is not very lucrative because the spot spreads are under stress now. So maybe we can keep a buy on dips kind of strategy here with JSPL and maybe Tata Steel we can accumulate, because if they turn around their UK business in future, and if the Kalinganagar plant delivers a good set of numbers in FY26, if they come up with a good production guidance, then maybe yes, Tata Steel can.
Right. I wanted your thoughts also. Got it. I just wanted your thoughts on Hindustan Copper, because the numbers there were quite on the weaker side. So any thoughts on how one should approach that stuff?
So copper as a commodity fundamentally is from a long-term perspective is well placed. The copper concentrates, if you see, there is a dearth of concentrate in the global industry, and TCRC rates will be higher for smelters. So from that perspective, Hindustan Copper, being a copper miner with copper concentrates, with no issue with respect to TCRC, it is a good stock, but at the same time, the valuations are quite stretched. And once again, we don't see the comfort from valuation perspective.
Okay, but it seems it's a story of, I think, 2, 3, 4 years ahead. I'm not sure. Numbers are disappointing yesterday. And from the lows, the stock went up close to around 10%. But as you say, you're not very comfortable. What about iron ore prices? You know, NMDC is going to be reacting to its numbers, and the numbers look quite good. There were 2 price hikes that they took in the past quarter, which already got reflected. And now there are 2 more that they have taken, which will reflect in quarter 4. Your view on iron ore, what are the pricing out there? Any view on NMDC, if at all?
Yeah, so iron ore definitely. I think it's fundamentally iron ore is in a sweet spot, or we can say the prices are may still sustain at a higher level. Just to give a brief background, means in China, because of that, before the lunar holiday, they started restocking and the prices started increasing from level of $100 per ton and they peaked at $140 per ton. And at the same time, the Indian miners, they started exporting the lower grade ore to China and they repriced the higher grade ore at a higher level. And with the merchant miners coming down, the level of supply in Indian business, in Indian markets for iron ore has really come down. So there is a supply demand mismatch, especially in India, with merchant miners coming, with less merchant miners and more demand as the steel production is increasing. So from that perspective, structurally iron ore is well placed. There is a dearth of supply and steel production is increasing. And at the same time, China's iron ore prices have, although they have come down from a peak of 140 to now 128 to $130 per ton, but we have to see now post this lunar holiday how they pan up their production and how whether if there is a China stimulus, if a possibility of that comes, then the prices may find support. And NMDC will be beneficiary of this higher level of iron ore prices, and that may reflect in their Q4 numbers as well.
Aditya, so good morning. Number one, number two, number three, stocks that one could buy here on an absolute opportunity basis.
I think we are most comfortable in stocks like Coal India because the long-term structural story of the coal remains there.
Got it. Coal India, what else? What's the number? Second best idea?
We are positive on stocks like APL Apollo Tubes, JTL Industries, which are kind of converters, and they have a structural tailwind from the infrastructure capex and all those stuff. So from that perspective, these three provide much more safety, whereas the other stocks I just discussed, there is a valuation issues. So we'll wait for correct time to enter there.
What is the target on JTL?
JTL, we have a rupees 300 target.
All right. So there's still, what, 20% upside, right? More, actually. 25% upside from where the price is at right now. So Coal India, APL Apollo, and JTL are the top ideas in terms of absolute upsides as Aditya sees it at this point in time. I think Sudarshan is with us with his 9:10 call. Sudarshan, welcome back. What's